All right. Hi, everyone. Welcome to the Parvis Brick by Brick webinar. Today, we will be receiving a presentation from Joshua Hu from Goodland Equity Partners. A quick disclaimer before we start. This content is not intended to provide and should not be relied on for investment tax, legal, or accounting advice. Nothing in any presentation shall be construed as a recommendation or offer to sell or solicitation of any offer to buy any securities. A quick intro on who I am and Parvis. I'm a deal rep at Parvis, and I've been a deal rep at Parvis for about 2 to 3 months now. I've been a DR overall for a little over a year and a half. Parvis is a tech-driven real estate investing platform and exempt market dealer. We specialize in bringing quality real estate investment opportunities to both eligible and accredited investors, making the process quick and simple. For any information, feel free to visit our website at parvisinvest.com, or you can simply email me at Russell@parvisinvest.com. So I'm going to pass it over to Joshua who is going to be sharing their multi-phase development project. Over to you, Joshua.
Thank you. Thank you, Rosal. Let me share my screen. Let me see. Um, Here. Hi, everyone. My name is Joshua Hu, and I am the founder and CEO of Goodland Equity Partners. Goodland Equity Partners is a private equity firm that underwrite real estate development deals and allow retail investors to co-invest with the developer in institutional grade development projects and making development profit. So my target is to allow my client to make above net of fee IRR, which is internal rate of return of 15% and above, depending on the project and the risk of the project. I'm looking for a project that can generate highest risk-adjusted return for our investors. Today, I'm going to introduce to you one of the deal that we are issuing currently, one of the offerings that we're issuing. It is a project in Mont-Tremblant, multi-phase development. The location is called Vincent-Soleil, which is at the south side of Mont-Tremblant, and south side is a better side because you can ski longer. So let me get started. Vincent-Soleil in French means sunny slope. So it has a good name. It's in French. I don't know it's French, but that's what they told me. And in this project, we have multi-phase. We have 7 phases, in fact, and we have townhouse, we have condo, we have detached home, and we have a hotel there. And each detached home in the ski resort, they call it chalet. Each chalet are different. We actually sold most of them. There's only one left. So there is some disclaimer here. Today, the numbers are all projected, and the currency is in Canadian dollars. There's a forward looking statement. If you want to know more, you can download the deck later on, and it has all the disclaimer there. And there are risk always associated with investment, so always consider every aspect of the disclaimer. All right. So we are looking to raise $42 million for this project. We can raise anywhere from $10 to $42 million. And the minimum investment amount is $25,000. The projected term is 4 years. It can be longer or shorter, 3 years, 4 years, 5 years, but we underwrite it at 4 years. If you ask me today when will we finish, it probably will finish in 3 and a bit years. Each unit is $100. So no matter how much you invest, 25,000, 25 million is always $100 a unit. And the location is at the Mont-Tremblant. Altogether, there are 488 units, that's including hotel. 7 phase. The land area is net land area is about 32 acres, 1.4 million square feet. Investors can invest through in limited partnership directly or in mutual fund trust. So if someone invests through registered account, they will be investing in mutual fund trust. Um, Investor can invest through RSP, TFSA, Lira, RIF, and RESP too, and also invest in LP. I want to take a moment to talk about registered account in this context. You know, when we run a business, if we generate profit, we have to pay tax, right? No matter if it's Apple selling iPhone, generate profit, they have to pay tax. And then investor is going to enjoy the appreciation of the stock price or uh, enjoy the dividend that they have to pay tax on. But in the real estate development project, the common structure is limited partnership, LP, and it is a flow-through entity. So if I, as an investor, invest as an LP, the profit will flow to me, and then I will pay tax. But there is a situation when an investor use a registered account to invest, like say tax-free saving account. The profit is going to flow into the tax-free saving account and is not paying tax. So it is a very tax efficient structure. It makes sense for investor to invest through registered account. Obviously, when they use up all their room, then they have to invest in LP. So in my experience, typically, bigger investment usually invest directly in LP, but if a smaller ticket size, usually investing in the registered account. Okay, there are 7 phases in this project. Phase 1 and phase 2 is currently under construction, and we are building it, the one that being sold. Infrastructure are all done. So 7 phase, there are some condo townhouses and all that. We're going to talk about the detail later on. They have different completion dates. And here we can see there are a few investors here. Brevia Group, they are the developer. They are also investors. So they invest quite a bit of money there. And um, BMO Real Estate Fund, they also invest in this deal as equity partners. So it is like a vote of confidence when they invest, because for the bank to invest, their real estate team has to recommend it to their investment committee, and they need to approve by their internal investment committee as well as external investment committee. So they will have to go through a process to invest in the deal. So we are one of the investor, and they are 3 other LP limited partners currently in the deal that if we invest up to 42 million, so it's very likely they will be redeemed from the investment. There are a few highlights in this project, and I would say the first one is there is an 8% preferred return, non-compounded, and then their investor will get development profit later on. So this is there to protect investors' interests. In case project get longer, delayed, investor is going to enjoy the 8% preferred return at the end of the project when there is distribution. So there's a thing we call waterfall. Waterfall detect how money is coming out. The first money coming out is going to pay back the capital. Then the second one is going to be 8% preferred return paid to investor. For example, if the distribution happened in 4 year time, investors are going to get their capital back, and they're going to get 32%. 8 times 4 is 32% preferred return back, then their share of development profit. If it's 5 years, they're going to get 40% back before development profit. So the mechanism is there to encourage developer to finish quicker, because the quicker it finish, the less 8% they have to pay to investor, the more development profit to be shared by everybody. So this project is true ski out. Ski out is very rare because you need to have a very unique location. For those who love skiing, usually people have to drive the car, park at the parking, carry the ski, go maybe walk a distance before they get to the ski station. But true ski out, chalet or condo or townhouses allow you or anyone to open the door, put on the ski, and ski right down the slope. And then when they come back, they ski back to their door. So it's very convenient. So in a day, they can go in and out, come back for lunch. Very early in the morning, you can ski before anybody else, and then enjoy that benefit. And the location is great. It is at Mont-Tremblant. We're going to talk more about it. Infrastructure are all ready. So the road is done, water storage infrastructure is all done. Phase one, phase two nearly sold out. So the market risk of phase one, phase two is done. So this project has been very much being de-risked. A lot of risk has been reduced or minimized. And there is an institution investment partner here. Construction loan has been secure for the property in phase one and phase two. They are currently under construction, and we project them to finish phase one and phase two, the sold component, um, in December this year. For those who don't know where Mont-Tremblant is, it is about 1.5 hours from Montreal, about 1.5 hours from Ottawa, and actually a lot of the US skier go there every weekend because it's closer for them than for us. But I have a lot of ski friends. They go to Mont-Tremblant many times in a season. So the Sun Soleil is basically attached to the Mont-Tremblant. We're going to see a bigger picture later on. Mont-Tremblant has been voted #1 for 20 times. Best ski resort in Eastern North America. West Canada, America, there's Whistler, but Eastern North America is Mont-Tremblant. There are 102 trails, 4 slopes, 305 skiable acres, and hectares, sorry. In a year, there are 185 outdoor events. There's a lot. And summer has more event than winter. And we have some QR code here if people want to just go to Mont-Tremblant and have a look at what they have. Some of the famous events, like Ski World Cup, over the world, there are 80 million global audience watching the competition. And another one is Ironman is a very big event in summer. So let's look at the location. It is very close. It's a 5 minutes drive to the village, but actually people can just take gondola and go straight into village. We can see that later. It's very easily accessible. There's road there. There are golf course around it, ski hills, parks, bicycle path, lakes, and it is actually connected to a ski station to the tip of Mont-Tremblant. Another one gondola to the Mont-Tremblant village. There's a stunning view there. Look at this. This little building here is casino owned by Quebec government. And the shaded area here is our site. So every single building here, every houses, they can just open the door and ski right down here. And take one of the two ski lifts, either gondola to Mont-Tremblant village or go to the peak of the mountain, and then they can ski down. When they ski down, they can ski here, trail, and then we install another ski lift here. The resident here can just take that ski lift and then ski back to their respective homes. And for the resident here, there's one benefit. They will be given a gold card for Mont-Tremblant. And this gold card allowed them to jump to the front of the queue, the line, for their ski lift. Some of the buyer actually just buy the condo for their gold card, and that gold card cannot be transferable. Is only for the owner. Owner can put their house to Airbnb, but the gold card cannot be transferred. It's owned by them. Let's look at some of the housing unit. We have 269 units of condo. Condo is the easiest to sell because the price is the lowest. So it's also the one that are on the market are all gone. Townhouse, we have 28 units. Currently, the one on the market, we probably still have about 6 or so available. Townhouse, sorry, mountain home, which is chalet. Each one is different. 15 units, there is only one left currently. The most up-to-date information. So why skiing, ski out? First, very convenient, very direct access and flexible. You can go in and out, easy break. scenic view. The view is stunning on this site. And it's safety too. Um, re re Ideal for families, reducing the need for transportation. If your kids, older kids want to go, they open the door, they ski, and then they can come back themselves. And it's very luxury. So it is very common in the chalet, is very common in Europe. In North America, they're starting to have more. But our development is on the scale wise, is on the very high end of the luxury scale and high rental demand especially during winter ski seasons. You can take a very high, very high fees for very high rental for your property. And summer, you can rent it out too. There are a lot of events in summer. Let's look at this picture here. So we have 7 phase. This building here is casino. Phase 6 is going to be a hotel. Usually, beside casino, there is hotel, but at this stage, there's no hotel now. So it is an ideal location for a hotel, and there's synergy there. So people can ski during the day, go to casino at night. And phase 3 is condo. Um, According to our plan, we will build the hotel, run the hotel, and sell the hotel. So build the phase 3. But what happened is currently we're talking to some international group of international hotel group. They are looking to buy this portion, so it's not certain yet, but it's high probability that it will happen. So the plan is not taking that into consideration currently. Phase 1 and phase 2 is currently under construction. We expect the unit that are sold, we are building them, and the target completion date is September this year. And phase 7 is another townhouse site that we haven't launched yet. Phase 4 and 5 is the best site on this site, best location on this site. It will be condo, so easy to sell. We're going to keep it to the last when the market is good, that we can generate the highest amount of revenue. It overlooks the lake, and also it's in front of the ski lift here. So resident here can just ski down the slope, and then when they come back, they can take the ski chair here, ski lift here, and then they just basically drop off in front of that door. It's very convenient. Let's look at some timeline. The project has been started in 2018, so developer bought the land 2018. By 2022, they start selling phase 1 and phase 2, and then they're sold. And they started infrastructure work, the road, the utilities, and all that. They got the zoning approval and everything done. They get the permit in 2023, building permit. By 2024, April, BMO Real Estate Fund invested in the deal. And Desjardins provided construction loan, and they start phase 1 and phase 2 construction. We will start invest in Q1 this year, all the way until April and possibly June. But currently, it's the contract with the developer is end of April. The valuation that we invest in is the same as valuation that BMO invests in. So, but the project has been even further de-risked because there is no entitlement risk. And phase 1, phase 2 is so construction loans of 10, they're building it. So it's actually very much de-risked. And what are the future risks? The future market risk when we start selling the future phases. So depending on the market, but I think the market is going to be better when the buyers see the completed phase 1 and phase 2. And if you look at the this targeted completion date for future phases, because the reason why we split it to different phases is we don't need that much equity. Instead of building all of them at once, if we want to build all of them at once, we need a lot more equity. That means the return divided by equity, the return in percentage wise will drop. If we do it in phases, then we don't need as much equity because we can recycle the equity. When phase one and phase two are completed, we will pay down the construction loan, and then we can start building future phases. The equity is going to apply to future phases, and we're going to have new construction loans, so we're going to roll over the equity until the very last few phases because there's no longer needed to roll over the equity, so we will start distribution. The distribution is likely to happen third year. But if we sell the hotel, the distribution probably will happen this year. Let's look at some of the condo, townhouse, and house that has been sold. So in terms of size, condo, these are luxury condo. So the minimum size is 1,254, and the maximum is 1,600. So these are large size condo. They've been selling anywhere from, let's say, in terms of dollar per square footage, about 800 to 900 something. So these are the condo which are all sold. So future condo, we will increase the price because condo is the lowest price item on the development. Townhouse, most of the sizes are just slightly under 2,000 square feet. And in terms of the dollar per square foot, we're looking at about a little bit over 1,000 per square foot. So you can say condo is about around $1 million, townhouse about around $2 million, chalet about around $3 million. So for the detached home, the size is around 2,500 to 3,600, and in terms of dollar per square foot is about 1,200 per square foot, and there's currently only one left, and each of them are different, which is very, very cool. So according to plan, our projected revenue is at about $517 million in revenue, and the net profit is just under $80 million. If we invest $42 million, our 8% preferred return and our profit sharing will be around 45.5 million projected profit. From that, 80% will be paid to investor and 20% will be paid to our company. So success fee. The more investors make, the more we make. So our interest line, we're looking for the best deal for our investors with the lowest risk. So we call it risk adjusted return. So at the similar level of risk, we want the highest return. According to the projection earlier, if this is net of the IRR for investor, 16.9. We consider only one cash flow to make it simple, because the cash flow, probably cash flow will come out earlier than 4 years. The ROI is at 86.7%. So if you look at the ROI, return on investment, as the time goes on, the ROI actually go up. That's because of the 8%. But IRR, which is the compound return, internal rate of return, would drop because IRR is a function of time. So as long as there is delay, the number will drop a lot. So if you look at 4 years, 86.7 divided by 4, we're looking at 22% simple annualized return if people are more used to that number. But it's more in terms of investment, most people are using IRR. And I will try to expectation from our client that to expect at around 13 to 15, because things happen in development, sometimes delays, sometimes this and that. So, but obviously hope for the highest, but manage expectation at around 13 to 15% IRR. So the developer is Brivia, and Brivia is also investors. And BMO is one of the equity investors. We are one of the investors, and there are 3 other limited partners that we very likely will take out if we invest $42 million. So here, there's a slide about us. We are an equity partner looking opportunity over real estate development deal over North America that makes sense for an investor. These are some of the projects that Brivia has built throughout the year. They founded in 2000, so they have done quite a few projects. A large percentage of the projects are in Quebec, in Montreal. So these are some of the projects that they do. They have some in Vancouver, some in Toronto. Some of the current famous new one, like one's Philip Square, Philip Square in Montreal downtown and Mainfield. These are their newer developments. So they are quite well known in Quebec, this developer. Well, that conclude my slide for today. Sally, should I share with the audience some of the video or not?
So the videos, we can have it hosted on the platform itself. So I don't think it will be a good idea for us to do it on the webinar just because the quality doesn't transfer. But we'll make sure. So Roussel's going to do the closing now. So we might want to backtrack a little bit, a few seconds, just you saying, so this concludes the end of my presentation. Thank you very much. And then Roussel will do the closing. And there we will mention that the videos will be available on our platform.
Okay, so you want me to share the last page again and then or just say it now without the slide?
Yeah, or I would start with the last slide,
Oh,
and then just do a closing there, and then Roussel can do her closing.
all right. That conclude my presentation today, and thank you very much for sitting through my presentation. The video can be viewed on Parvis website, and if you have any question, feel free to ask Parvis team. Thank you.
Thank you, Joshua. That was a very informative presentation. I feel like I've gotten my questions answered, but I just wanted to go over and highlight a few things that I feel like our investors might want to know. So with phase one and two basically being almost sold out, what factors have driven like the strong demand you feel, and how do you anticipate to, I guess, mitigate like the risk in the further phases, so phase 3 to 7?
First of all, the project is not very much leverage. So if we're building the units that are being sold, so and we check very closely about the risk of no closing, which is very low here. So when phase one and phase two are closed, the sold portion, we pretty much wipe out all the debt. So it's pretty much like a debt free or very close to it, or it depends, but it's very close to it. That means a piece of land with no leverage, the risk is pretty low. But obviously, we want to start building the next phase. So we will start selling before we complete everything. So we actually there's some subsequent sales from phase one and phase two that we are not building yet. It's not in our construction schedule yet because we sold them after we start building them. So we can carry on with that. So in terms of the marketing side, we basically just sell it organically now until future phase when we want to have a push, then we'll do a marketing campaign then.
Okay, so speaking of which, I know you mentioned phase 7 being a hotel and that you guys were gonna build it, run it, and then sell it. Do you guys have buyers ready, or would you be looking for buyers once the building's complete?
Okay, that's phase six. So phase
Phase
six is
6.
hotel, phase three is condo. According to the initial plan, we will build it, run it, sell it. But it is an ideal location for hotel. We are actually in a very serious talk with an international hotel group. Um, I guess a lot of hotel want to have their own say in their design and all that. So if we can generate income that makes sense, like say if we build it, run it with that amount of income, like profit, if we can sell the land, with similar amount of profit or maybe with some discount, it will still make sense to us. And because it will be de-risk our project and we will sell it. So it is a high probability event. One way
Okay.
or another. Yeah.
All right, that's good to know. And I guess my last question would just be like, what is the long-term vision for Goodland and uh, for Saint Soleil? Are there any plans for additional development or expansion in the area?
Um, there's no more land to develop.
Fair.
Right? So Goodland Equity Partners, we are a private equity firm. So we look for all the different type of project for our investors. The next project will be somewhere else that makes sense and that might interest our investors. So that we work to serve our investors. As long as this project is concerned, I think it's pretty much de-risk. It will just run a cost and finish, and investor can enjoy their for return and development profit and invest in some other deals with us. And we hope that investor can invest on next deal before waiting 4 years.
Great, good to know. Thanks again, Joshua, for the presentation. We will post the videos of what you guys have come up with so far on the Parvis website for investors to take a look at. This concludes our presentation, and thank you everyone for tuning in and watching.
Thank you. Thank you, Roselle.